Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 15th, 2025, and we're diving into the first quarter earnings report of zSpace, a leader in augmented and virtual reality solutions for education. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. zSpace has been making waves in the AR/VR space, especially in education, and their latest earnings report provides some interesting insights into their strategic direction and financial health.
Revenue and profitability overview. Let's start with the top line. zSpace reported a revenue of $6.8 million for Q1 2025, down from $7.8 million in the same period last year. John, what are the key factors behind this decline?
The revenue decline is primarily due to funding uncertainties within zSpace's customer base and delays in the delivery of committed orders. However, it's important to note the significant improvement in gross margin, which increased to 47.4% from 34.5%. This was driven by a strategic shift towards higher-margin software and services, as well as improved hardware profitability from their Inspire 2 platform.
Despite the revenue drop, the net loss narrowed significantly. Can you elaborate on that?
Absolutely. The net loss for the quarter was $5.8 million, a substantial improvement from the $12.2 million loss in the previous year. This improvement is largely due to cost efficiencies and a focus on higher-margin business segments, which have helped mitigate the impact of lower revenues.
Strategic initiatives and market positioning. zSpace has been active on the strategic front. They've fully transitioned to their Inspire 2 laptop and made some acquisitions. How do these moves position them in the market?
zSpace's transition to the Inspire 2 laptop is a key part of their strategy to enhance cost efficiencies while maintaining their immersive AR/VR experience. The acquisitions of BlocksCAD and Second Avenue Learning expand their capabilities in STEM and digital education tools, which are critical growth areas. Additionally, their inclusion in the Russell 2000 and 3000 indexes is a significant milestone, enhancing their visibility and credibility in the market.
Financial health and future outlook. Financial health is always a concern for companies in growth phases. How is zSpace managing its finances, especially with the recent convertible debt facility?
zSpace closed a $20 million convertible debt financing facility, which significantly enhances their capital structure. This move provides them with the necessary liquidity to execute strategic initiatives. However, their cash position remains tight at $1.1 million, and operating expenses have increased slightly to $7.6 million. This indicates a need for careful financial management as they continue to invest in growth.
EPS forecast and analyst expectations. Let's talk about earnings per share. Analysts had forecasted an EPS of -7 cents, and zSpace met this expectation. What does this tell us about the company's performance and market expectations?
Meeting the EPS forecast of mere $7, as predicted by the sole analyst covering the stock, suggests that zSpace is in line with market expectations. This alignment indicates that the company is managing its financials effectively, despite the challenging macroeconomic environment. It also reflects the market's cautious optimism about zSpace's strategic initiatives and future growth potential.
Key takeaways. In summary, zSpace's Q1 2025 results show a company navigating through challenges with strategic initiatives and financial prudence. While revenue has declined, improvements in gross margin and a narrowed net loss highlight their focus on profitability. The $20 million convertible debt facility further strengthens their financial position. John, any final thoughts on zSpace's investment prospects?
zSpace is well-positioned in the growing AR/VR education market, with strategic acquisitions and product transitions that enhance their competitive edge. However, investors should keep an eye on their cash flow and operating expenses as they continue to scale. Overall, zSpace presents a promising long-term investment opportunity, provided they maintain financial discipline.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on zSpace's performance in the comments below. Until next time.